Good morning and welcome to your Financial Empower Hour. This is Jason Cryderman with Great Lakes Investment Advisors. And for my viewers, if you're checking me out on YouTube or on one of my podcasts and you see like, wow, things look different in that studio. Well, everything is different, Tony. So you see Tony Shore with me here. You see Tyler Ellegard from Gradient Investments. But if you've been a viewer before and you've looked at the awesome flag behind me that I used to have, which was the Pledge Allegiance to the United States, the flag was there. The Pledge Allegiance to the flag and the United States flag, that's not there anymore. It's in my office, but I've totally redone my radio studio. Thank you very much to Mr. Tony Shore and the Gradient team over there to say, hey, Jason, you got an awesome show. We run things really good. It's a tight ship. However, the office, the studio's looking kind of stale. We've just got a flag on a brick wall. We need to spice it up. We need to redo that office. So we had one of their team members, Justin, come on over, J-Dog, and he came over from Minneapolis, and he spent 2 days here with me in the office. We bought a whole bunch of stuff. We revamped everything. I got all new lighting. I got all new AV. I got all new, you name it, man. It's pretty cool, Tony. So how do I look? How do I look now, that you're looking at me from a different studio perspective as well?
Much better. I mean, not that you look.
You saying I didn't look good before, Tony?
I knew that would come back to bite me. But yes, you look fantastic. But the lighting is a lot better, and I know we really want to take the show to the next level. And it's always been a great show, Jason. You always have great information, but visually for our viewers who watch it on YouTube and online, a whole new look, a brand new studio, all new equipment. You sound great. It's fantastic. Justin did a great job over there. He's one of our main videographers from the Luson Media team here at Gradient. And he knows what he's doing. He set up studios all over the country, and he's fantastic. So that's awesome.
To have him over here for 2 days. Like, we had talked about upgrading the studio, you and I, for many a months now. And I kept telling you, Tony, but I'm not a radio guy, right? They say I have a face for radio, but other than that, I mean, that's about all I know is how to put on these, put on the headphones and sit in front of the mic. And I don't know how to get the computer, and I don't understand how this stuff works. But to be able to have Justin finally make it over here for 2 weeks to help me set this up. And I went on, shopping sprees on Amazon, and we just bought all kinds of really cool decorations and shelves. And so it's really coming along. And so it's not done yet. There's still some more things we need to do. But it's really going to be awesome, especially when I have guests on my show. For those of my listeners and viewers that, I've had guests on my show in the past, but it was kind of tough to see them because we were in a very small area. We kind of had to stand shoulder to shoulder to look into the same little camera on the laptop. Well, now we've updated all that. We're going to be able to sit in chairs side by side. It's going to be a lot more comfortable. So I do plan on, just so I go ahead and let all my viewers and listeners know right now, I do plan on having a lot more guests on my show this year, live here in the studio. Now, today, if you're one of my viewers or my listeners will hear in just a few minutes, you'll hear the voice of Tyler Ellegard. And I think he's actually now called the voice of Gradient Investments, the voice. So because I do have him as a guest, and I have awesome guests all the time, like Tyler and other members of his team that sit in Tony's office where he's recording. But now that I've updated my studio here, we're going to have a lot more guests here in my studio. So I'm really excited about that. All of my listeners out there, if you haven't checked us out on YouTube or any of the podcasts or anything, please go and do that. Go to YouTube, check us out, like us, follow us. You can watch us on Facebook, but YouTube is really the place to go. And it's kind of the new wave thing, I guess. I mean, here I am 51 years old, and my kids that are 12 and 15 and 19 are like, Dad, YouTube is already so old. Like there's a Tic Tac Shack thing going on now, and all this. I can't keep up with you guys, but for my viewers out there, for my listeners, if you are listeners, check me out on YouTube. Greatly appreciate that. And for those of you that are following and watching on YouTube, thanks a lot. And do me a favor, send me some comments or feedback either on the website or call in and let me know what you think about the new studio. Good, bad, ugly, and different, whatever you think. But we put a lot of time and effort into this. So thanks again, Tony, to you and Justin and the rest of the team over there at Gradient and Luson Media. But it's a lot more comfortable to be sitting in here and talking to you guys. So I'm excited for all the shows to come out of the new studio now.
Well, yeah, it's a great studio, and you're right. We have a very special guest today. You guys are going to be talking about the markets, and I'm always excited to sit next to my friend and a great, amazing talent in this industry, Tyler Ellegard. Tyler, what's the official title? Is it Senior Portfolio Manager?
Yep.
All right,
right.
a great
The voice.
the voice of Gradient Investments, Tyler Ellegard, is here to talk markets. And there's a lot to talk about with everything that's been going on.
Mm-hmm.
I'm just trying to ride that oil wave of the oil prices. We'll get into that too, Jason, and we'll talk about all that. But first, Jason, I know you've been busy. First of all, since the last time I talked to you, you built a new studio. You got all new equipment. You got all new video equipment. Business is booming. You've been busy. I know you've been talking to a lot of people, meeting with a lot of folks, taking care of your clients. Regardless of what's happening in the markets, you really have overall plans that help your clients. Now, and we've had a couple long weekends in there. Have you been doing things with the family? Are you busy with the kids?
Yeah, that's a crazy question, Tony. You know better than to ask me that. Busy with the kids. Absolutely. Yeah. It's things might, I say might, and my fingers are crossed here. Things might be slowing down a little bit for the Cryderman family. As of last week, on Thursday, Carson and Josie had a half day of school, and it was their last day. So as of last Thursday, from when we're recording this show, all our kids are out of school for the summer. So there's an old song, and Tony, you being the radio DJ guy, school's out for summer.
School's out. Yeah.
Who is that? Who is that sings that?
I believe, was it Alice Cooper?
I think Alice Cooper. From what I remember, I wasn't going to throw it out there, but and it might have been a remake or something. But
it's been done a couple of times. I think there was a hair metal band and one of the hair bands in the 80s, like Motley Crue or somebody did a cover of it. But School's Out for Summer, I believe, was Alice Cooper originally.
Okay, well, that's what we're seeing around my house because, as I mentioned, as of last Thursday, Carson and Josie are out of school for the summer. So that's exciting. Lexi came home about 3 weeks ago from Michigan State. So it's crazy how fast time flies, as you guys know. And Tyler, I know you got a lot younger ones. And I'm telling you, man, I've probably told you this before, but my number one piece of advice to you is don't blink. And my viewers and listeners, if you're parents or grandparents, you're probably shaking your head right now saying, man, that's crazy, honest advice right there. Don't blink, because it seems just a month or two ago, we moved a freshman into Michigan State. And then 2 weeks ago, we moved home a sophomore, right? I mean, it's just her first year of college, just gone in the blink of an eye. It's amazing how fast it happens. And it was only months before that. I thought months before that, she was in 6th grade. And a year or two before that, she was, taking the tricycle, the training wheels off the bike. And then it wasn't long before that she was still, diapers and formula. And so time flies. But right now it's summertime, and the weather over here is finally getting really, really nice. And so we're getting ready to clean the boat up. I got the battery trickle charger on the batteries now. And so unfortunately, when we talk about more into the show today, these oil prices and reflective obviously in fuel prices, when you get ready to put a boat in the water, it's obviously it's going to cost more money in the vehicle to haul the darn boat, and then all that fuel that runs through the gas lines and the engines of the boat, that's going to be a little hard on the pocketbook this summer. But I think that's one of those things, obviously today on the show, and we'll talk about more on the economy, right? What is these gas prices? People probably, I'm thinking, people slow down maybe a little bit, but I mean, traffic out there around Midland and the Tri-City has been crazy. I don't think people aren't driving as much anymore. The boats that we've seen, we finally have our water back on Sanford Lake, which we haven't had for 6 years. May 19th, 2020, when the 4 dams breached and we had flooding and then the lakes were gone. We finally have our lake back, and there's a lot of boats. I mean, yesterday when my son and I, Carson, were driving across the US 10 bridge and looking out both sides, I mean, there was probably, 20 or 30 boats we could see on both sides of the lake. And so it's amazing. So when we start talking about, obviously in the show today, we're going to talk a lot more about oil prices and the economy. And now here we are coming into summer, right? We just come through Memorial Day. We're getting ready to fly right right into June and July and 4th of July and Labor Day. And so, these prices, what is it going to do for the overall economy? Do we think people are going to slow down and not travel and not take the campers as far and not take the boats? Or is the consumer healthy enough and the overall economy healthy enough that we're going to push through these higher prices? Or maybe even, is there some rescue at the end of the tunnel or some light where these prices are? I know we've seen them come down a little bit as far as, fuel at the pump. So that I'm really excited to have Tyler on the show and get into those things, but to kind of circle back to the question you had about have the Crydermans been busy? Yes, sir. We've been really busy, Tony. Like I say, the kids are out of school now. Track has kind of dwindled down. Josie just had her state track meet this past weekend. She was very fortunate to qualify. She was the only sophomore and only 2 girls out of Meridian High School to qualify for states in track. She was the only runner. The only sprinter. The other girl was a thrower, shot put in discus. So out of all the kids that made it from Sanford Meridian to states, Josie was the only sprinter girl, the only runner girl, and she was a sophomore. She did very well, and she does 100 hurdles and 300 hurdles. God bless her little soul. Hurdles and me just wouldn't get along anyhow. But if anybody has watched track and seen the 300 hurdles, that is just excruciating to watch and even want to run. But
fathom it.
Oh my gosh, but she is so darn good. She's very, very close to the junior high record in the 100, and she's about 2 to 3 seconds off from the school record in the 300 hurdles. So being a sophomore, now she's got 2 years left, her junior and senior years. So as committed and as driven as she is, we're very excited and looking forward to maybe someday on this show being able to have her as a guest and say, hey, I want to welcome on the show my daughter and maybe a state qualifier, maybe a state champion, and maybe a record holder for the school as well.
Awesome.
And then Carson, he's busy into baseball, travel baseball. We still have 1 or 2 tournaments, and then Little League's kicked off now, and so we're 2-3 nights a week. We're at the ball field, so yeah, nothing changes, Tony.
Wow. I mean, the end of school really doesn't. You said, hey, end of school, we're not as busy, but it sounds like you're still busy.
Well, I guess I was maybe I mislead myself a little, right? I tell myself, hey, yeah, school's out, we're not going to be as busy, and then the reality sets in, and it's like, well, geez, we're just as busy, if not busier.
Yeah,
so
that's what happens. Well, I'll tell you what, we need to take a quick break before we jump in with Tyler and start talking about what's going on out there with the markets, what people need to know as far as finances and the economy. But speaking of that, one place people can start and get a good head start is your book. And look at that. Look at that. Empower Your Retirement. It's great. A lot of great financial information in there. Empower Your Retirement. We're going to give away 10 copies. The next 10 people who contact the office and say they heard about the book on the radio show, whether you watch it on YouTube, listen to it on podcast, or on the air each week, just call in and say you heard about it on the show and give them your address and info. They'll ship you out one. No shipping charges, no obligation. It is completely complimentary, no charge. So just call 989-835-7203. That's 989-835-7203, or go to GreatLakesInvestmentAdvisors.com and fill out a contact form, and they'll get back to you, and you can let them know you want a copy of the book. All right. Great show so far. And you are listening to your Financial Empower Hour with our host, the man with the plan, Jason Cryderman. I'm your co-host, Tony Shore, and we've got a very special guest today. He's been very calm and quiet over here. Tyler Ellegard. We're going to bring him in right now to talk about what's going on in the market. Jason, I know you have some questions for Tyler for our listeners out there.
Yeah, my first questions, Tyler, are going to be really, really serious, and probably one of the most serious questions you've been asked this week. Even I know it's early in the week when we record this. It is Monday, but how's the family, man? How are the kids? I just talked about, don't blink and my kids, and your kids are
the first segment, but
your kids are a little bit younger than mine. Yeah. So, but tell me, man, how's the wife? How's the kids? How's family going for you, Tyler?
Everybody's good. We, I was up at the cabin last weekend with them. I don't know why we didn't go up Memorial Day, but decided to go the next weekend.
Okay.
So they're
Not as busy.
Yeah, they're 4 and 2.5, both boys. And so last year we kind of started fishing with our oldest, or getting him like a little fishing rod and just kind of having him do it. So we did that quite a bit this weekend. So I think we caught probably like 12 sunnies.
Okay.
He was excited about that. He doesn't want to touch them yet. He's a little scared. But that was fun. We had some great weather and just enjoyed the weekend.
Good for you, man. Good for you. Well, I appreciate having you on my show. Obviously, I appreciate all your knowledge and experience and insight into helping educate me more, and of course, all of my clients that I serve, and you manage their portfolios and their money through Gradient Investments, as well as all my listeners and my viewers. It's so awesome to be able to pick your brain, right? And I've always said, when you can have the experience and the knowledge of somebody who's managing billions of dollars for clients all across the United States. When you do all the research, all the, what I call in the trenches work. And then, so to have you slow down for a second, sit down and slow down for a half hour to an hour on my show. And let's just get down to the nitty gritty and keep educating and informing me and my clients and my listeners and viewers on what the heck's going on in the markets and the economies, and, what drives the markets. What are the fear factors that people need to be what I'm going to say aware of, but then again, maybe realize some things we're afraid of aren't they're just more hype, right? They're more smoke and mirrors or hype, and really not going to, it's that fear factor thing, but is it going to destroy or change big things? Probably not, right? So, but then again, there are some things, boy, if you're not aware of them or concerned about, and maybe even scared, then those are things you really have to look out for. Otherwise, it could cause you some very big problems financially. So let's jump right in there. And I know you're going to talk about some earnings seasons, and you're probably going to talk about oil and fuel and gold and silver, and probably going to talk something about the Middle East conflict. And so let's jump in right now, Tyler, from when I say in the trenches, what are like the top 3 or top 5 things that not only Gradient Investments, but all other portfolio managers, all other companies do what you do. What are you guys looking at and thinking right now?
Yeah, well, I was actually thinking about this. So before I jump into that, I'll be out your way. When's your event? October?
I want to say October. Yeah, you'll be coming out. And my viewers and listeners, you'll hear a lot more about this from my clients, because we are going to have a state of the economy, basically a market update and state of the economy, where Tyler comes out, flies over here, stays in town for a couple of days. He'll be in the office, and he's going to do a live event presentation in the evening. And so it's awesome to have you come over and do that as well, Tyler.
Well, the reason I bring that up is maybe we can do a recording, and I'll be in studio with you instead of Tony.
Yeah.
Heck yeah, man. That sounds exciting.
I think that's great, honestly.
Yeah, let's do that while you're here. Yeah.
Anyways, back to your question. So there's a lot going on right now. I think one thing that we're looking out for, so you brought up earnings season. So we have about 97%, I believe, as of last Friday, of the S&P 500 companies have reported their earnings. So we're pretty much through, and really it's been a lot of positives. So usually what happens, Wall Street puts out estimates for the S&P 500, the aggregate companies, and gives you X earnings per share. We came into the year expecting about 13% growth, and usually what happens throughout the years, because Wall Street benefits if companies grow their earnings at 13%. What tends to happen is these analysts meet with the investor relations teams of the companies, the management teams, and they start to walk the analysts back and say, you know what, it's probably not going to be that great of a year. Maybe we'll get 8-9% instead of 13. That's the normal trajectory. So as the year goes on, that 13% turns into 11, turns into 10, turns into 9, turns into 8, which 8% earnings growth is still good. I mean, the S&P average return is 8 to 9% over the long.
That's great. Still, yeah.
I'll take 8%.
And that's earnings is what drives the market, regardless of any noise that's going on, wars and conflicts and you name it. As long as companies continue to grow their earnings, that's a good backdrop for the market. So we had about 85% of companies beat their earnings expectations. And What's actually happened this year is that 13% has gone from 13 to 14 to 15, and now we're sitting at about 18%. And I did see one estimate out there last week that was saying 21%.
Oh my goodness.
So obviously these are just estimates, so everything can
Sure.
change, but generally speaking, that's pretty good. And the quarter that just finished, it was actually 28% on a year-over-year growth from Q1 of this year to Q1 of last year.
Yeah.
28% roughly, give or take a few basis points there. But so this was a very good earnings backdrop. And the next closest one that we've had was Q4 of 2021. We were coming out of COVID, and that was 31%, where the economy was shut down. Right. So, I mean, we're seeing significant growth from companies, and it's not just the companies that you're used to hearing about, like the Amazons, the Metas, the Microsofts. Like those companies have led us for the last, call it 2.5 years. But now you're starting to see industrial companies perform well. You're starting to see financials perform well. You're starting to see utility stocks perform well. Like you're seeing a lot of positives, and all of it is being tied back to AI. Artificial intelligence.
Yeah, that's huge.
There's some areas where we do need to be cautious, though, or that we feel we need to be cautious. So the last couple of weeks, semiconductors. So they are the chips that go into your computers. They're the chips that go into the data centers that are providing the power for artificial intelligence and large language models and storing all the data and looking through the data. So they've had a significant run. And the reason for that is there was a report that came out that data centers now need more memory, so CPUs, than they do graphic processing, the GPUs. There's like a 8-to-1 ratio now where you need 8 CPUs to 1 GPU. And so you're starting to see some of the companies like Intel, Micron, just your traditional semiconductor stocks do extremely well and up hundreds of percent this year.
Yeah.
Now, I think that's a little bit overdone because at some point there's supply constraints, there's uncertainties of what could happen if Meta and Alphabet and Amazon decide that they're not going to spend as much. Now, I don't think that's the case. I think they will continue to spend, but any hiccup along the way right now, there could be some issues. So, and semiconductors make up about 19% of the overall S&P 500 right now. 10 years ago, they made up 2%.
Wow. That's a significant increase.
That's a huge number. That's a big difference.
Because that's a big marketplace.
Yeah.
That's a lot.
And traditionally semiconductors they're pretty cyclical type of companies. So I think there's that pocket in the market needs to be monitored, and we're being very selective of the stocks that we own in our portfolios. So I think that's one. The other concern that needs to be watched, again, this doesn't keep us from investing. These concerns don't keep us from investing.
Right.
It tells us where we should be positioning our portfolios and how to position them. So the other one that we're watching, and I guess I shouldn't say concern, but just things that we're watching, is the semiconductors. And then the other one is the price of oil. I mean, we're an oil-based economy. So is the world. And we're starting to see countries have oil deficits right now. So if you start to think about manufacturing that happens overseas, they need oil and gas. And a lot of those countries are emerging countries that tend to be the last ones to get oil. So there could be some additional supply constraints, which then leads you into inflation, or the question about inflation. We're already seeing inflation jump. We're at 3.8% was the consumer price index report for last month. So we're watching the inflation mark because then it takes you down the path of, what does the Federal Reserve do? The Federal Reserve has 2 main mandates. One is to control prices. The other one is to have full employment of the economy. And we're starting to see inflation pick back up. Now, do we get back to the 9.1% of COVID? No, I don't think that. But I think as long as oil prices stay elevated, you're going to start to see that impact all. It's not just what you feel at the pump. It's the oil that goes into every other product that you buy as a consumer. And so the longer this stays elevated, the more those prices, companies will push those prices through. So you start to see not only just oil and gas inflation, you start to see actual product inflation. And we're starting to see a little bit of that pick up. But But then you get into the question of, does the Federal Reserve try and increase interest rates to try to slow down inflation? Because that's one of the levers they pull that we saw from COVID, and what they're there for is if the economy is getting too hot, there's too much demand for not enough supply, prices start to increase. And so they pull the lever where they will actually raise interest rates to try to slow the economy down. So if we start seeing inflation, that's one of the questions is, does the Federal Reserve actually start to increase interest rates again after they've just been starting to lower them the last 2 years? And then on the flip side of that, the employment question is AI is starting to not necessarily take jobs. You are seeing some layoffs throughout the economy happen. But what companies are doing instead is they're not necessarily firing anybody. They're repositioning employees, but they're also not hiring.
Right.
That's in my opinion a bigger issue for the Federal Reserve, which if there's not enough hiring and there's a slowdown, what they'll actually do is cut interest rates to try and jumpstart the economy and get it to go faster. So the question is, what does the Federal Reserve do? I think that's one thing that we're watching. I'm more in the camp that they'll actually consider employment over inflation, just because if the Iran conflict, I don't, can we call it a war? Is it just a conflict? I'm not really sure.
It changes from
It
week to
changes
week.
every day. Depends on who you talk to.
Yeah.
Because as soon as it's over, oil will still take probably 4 or 5 months for prices to go back to normal. But at some point, those prices will come back down, and the Federal Reserve can't really control the prices of oil. So I'm more in the camp, though, they're closer to cutting interest rates still than they are raising. But I'll touch on the Iran war since we're there. But because, Jason, this is going to be important for you, is even if the Iran conflict ended tomorrow or today, your oil prices are still going to remain elevated for some time.
Yeah. And I mean, it's kind of, people got to think about that, is it's not going to happen overnight. So I like to relay the cost of, it was the same way after COVID with everything, right? But I mean, the cost of oil and gas prices was a lot like my GPA when I was in school, but in the inverse. Okay. So follow me here. Follow me, Tony. So oil prices, they went up really fast and they're going to go down really slow. Well, that was just like my GPA, but the other way around. My GPA went down really fast and up very slow. So just think about gas prices and oil prices being exactly like my GPA, just inverse. They went up very fast. Even when the conflict or the war ends, it will take some time. Those things come down very, very slow. So all joking aside about, my GPA and oil prices and those things. So Tyler, after we take this quick break, I want you to let's chat a little bit more about this Middle East conflict. Let's chat a little bit more about oil prices. But you also mentioned, I think it's very important to point out for my listeners and viewers, that the market, the economy is driven by profitability of companies. And I think that's important. A lot of people are like, gee, with this war and everything, why is the market not tanking? And it dipped a little bit, but now it's skyrocketing because, as you mentioned, there was a large percentage. I think you said 85% of the 97% of companies that have already reported have had profits, have been profitable, maybe even higher than they were projecting. And so that's a good thing. I think the other side that drives the market is the consumer. So I want you to touch on that as well, and the health of the consumer.
All right. And we're going to take a quick break first, though, to give away some more books. Jason has a book, Empower Your Retirement. And it's an amazing book. All you have to do is be one of the next 10 people to contact the office, whether it's through the website or via phone. And once you make that connection, tell them that you want a copy of Jason's book. They'll mail it out to you at no charge, no obligation. Call 989-835-7203. That's 989-835-7203. Or you can go to GreatLakesInvestmentAdvisors.com. That's GreatLakesInvestmentAdvisors.com. And you're listening to Your Financial Empower Hour. I'm your co-host, Tony Shore. I'm here with our host. The man with the plan is, in fact, Jason Cryderman. And we're here with our special guest, Senior Portfolio Manager at Gradient Investments, Tyler Ellegard. Jason, before we went to the break, you were asking Tyler, I believe we were talking about Earnings are up, Tyler said, but oil prices, we need to watch out for those, right?
Every I shouldn't say everything, but oil goes into so many products and services. It's not only a tax that you have on going from point A to point B, it's also a tax because it goes into a majority of the products that you're probably using on a day-to-day basis. So there will be price increases at some point, which it'll hurt the consumers or it'll just reduce their purchasing power. The other thing that we're seeing in the economy is you had brought up the consumer and how it can impact them. We've been talking quite a bit about what we call a K-shaped economy, where your higher end consumers are doing just fine, which is probably a majority of people that you were talking about seeing a lot of boats out there.
Yeah.
A majority of people that are probably going to be boat owners for the most part are probably in that, the upward trajectory of the K, right? And they're still feeling fine regardless of oil prices being higher. Now, the people that are on the down slope of the K, that's where you're starting to see the impact of, the price increases that you've had over the last 6 years since COVID. Those are the consumers that are really being impacted. So if you're in that upslope, you're probably not as worried. It's an annoyance that oil prices are higher, but it's not something that's going to keep you from getting on your boat and going fishing
or spending money in general.
Yeah, exactly.
Sure.
So, that's really what you're going to see. And obviously the longer oil stays elevated, the more impact it will have on the upward sloping consumers. But generally speaking, they're still feeling fine because a lot of those people are the people that have owned stocks the last 6 or 7 years. They own real assets, whether that's home, gold, different types of real estate, like you name it. Those are the people that have been benefiting the last 6 years, or I guess even longer, but really in the last 6 years, those are the people benefiting.
Yeah, so I think that's that's really important for my viewers and listeners to hear what Tyler has to say. Remember, Tyler again is a senior portfolio manager for Gradient Investments, and they manage I believe it's over $7 if not $8 billion of assets, of money for families and investors. And to hear him talk about what's going on in the trenches and how does that impact not only all of us on the street every day and in our pocketbooks and with oil prices, but also what does a company that manages that kind of money, what do they look for, right? What do they think about it? How do they think it's going to impact them? And so oil price is a big deal. As you mentioned, they went up. They're probably going to maybe continue to go up a little, but hopefully we see them come down on the decline as the Middle East crisis, Middle East war, whatever we want to call it, as that hopefully at some point in time starts to come to an end. But it's going to be a slow, what I'll kind of call like a trickle effect, right? I think that the oil prices, the gas prices, and the price of everything, because as you mentioned, Tyler, oil, fuel, all that kind of stuff in one form or another goes into almost everything that we see in my office, everything we see in our houses, everything we see when we go, that we wear, even the food that we eat, because you'll think about the manufacturing of it, the transporting of it, everything, right? I mean, you can't, so those costs across the board are going to increase because of oil increasing. And so we will see it come back down, but it is important to hear, I think it's crucial to hear you say that there's a lot of other things out there, not just oil prices, to be aware of. Again, not scared, but aware of, and realize these things aren't going to change overnight. So now what are some of the things, I guess, maybe from the consumer end again? We talked about the profits and earnings of corporations. We talked about oil in the Middle East. What do you see? What do you guys see from the consumer as far as spending habits go? And as far as, the health of the economy from a consumer aspect, Tyler?
Yeah, the consumer's actually still been strong. We hear, I just talked about the K-shaped economy, and your lower end consumers is feeling it, but generally speaking, people are still spending money. Now we did get our economy is looked at from, there's a lot of different reports you can look at, but the size of our economy is shown by the gross domestic product, or GDP, and we just got the second. So they go through the preliminary release, they go through a secondary, and then there's a third and final one for the previous quarter. So last week, we just got the Q1 second revision, and they actually lowered the growth of consumer spending. So the expectation of GDP came in lower than what economists were expecting.
Okay.
And a good chunk of that was because consumer spending was actually a little bit weaker than initially expected. So it's not a concerning thing yet. And there really isn't much of the Iran conflict and oil prices in that report yet. So Q2 will be an interesting one to keep an eye on. But one thing that we don't do at Gradient Investments is we don't take one data point at its face value. So what we like to do, so the 3.8% inflation, we don't just take that for what it is. We look at what the actual trend of it is. So if in Q2 we continue to see a trend of consumer spending weakening, that's what we're more so looking for than just saying, oh shoot, consumer spending was weak this quarter, let's sell everything.
Yeah.
Right. That's what we don't do. We want to make sure that we're looking at, maybe this was a fluke, maybe there was something going on. We'll have to take Q2 with a grain of salt, especially if the Iran conflict is over, because at some point oil prices will come back down and opens up your consumer wallet book again. So consumers are still doing fine. It's not.
I'm shocked at the resiliency of the U.S. consumer and the stock market, considering everything.
Well, let me ask you guys this. What is one thing Americans do very well?
Spend
money.
Spend money.
So as soon
We're
as
a
it comes in, it goes
consumer-driven
up.
economy, right?
Yeah, I mean, it's important to point out, because when times are good, we spend money, right? We do things that make us feel good, and we spend money. When times are bad, we spend money on different things, right? I mean, people still spend money, and so a lot of people say, "What's the number one stock, Jason, you can give me for advice?" And I tell people, and this is kind of a joke, but there's some truth to this as well. Alcohol and tobacco. Because when things are good, people party, they celebrate, they drink, they smoke, they do those things, right? When things are bad, people are depressed, they drink, they smoke. So no matter what the heck mood you're in or how you're feeling, you're going to do those things, good or bad habits. And so those stock prices are going to boom either way. So now, again, that was kind of a joke, not really. But if you think about that for a minute, there's some truth to that. And so you're right. I mean, you're really right, Tony, is the resilience of the consumer. Spending habits are still there. Now, you've mentioned, I think last time on the show, Tyler, we might spend, maybe we don't go out to the high-end steak restaurants as much, but we're still going out to eat. We're just going down to a little lower quality, right? So the spending is still there. And so, and that's important. I think one of the things I want to point out before we take our last break here, Tyler, you just mentioned that you guys don't focus on any one factor, right? Any one fact to make your decisions in managing money. And what I relate that to is you guys diversify your thoughts, you diversify your decisions, or you use diversification points, not just, hey, that one thing is going to make us make this decision. I'll also say you take the blinders off, right? It's not like you have tunnel vision and just looking at one thing. No, you take the blinders off and look at a bigger picture, look at multiple aspects, multiple facets, multiple things that are going to go into why and how you make your decisions. And that is key. That is huge. Any of my listeners and viewers right now, if you have Gradient Investments as your portfolio manager, which would be through me, primarily, especially around the mid-Michigan area, you know that. You understand. You felt the power in their management of their portfolios, because when the market dipped, you don't lose as much. And when the market goes up, you're capturing a heck of a lot on the upside. So these are some of the reasons why. So thank you for sharing that with us, Tyler.
All right. Well, we're going to take one last quick break and come back to wrap it up. Listeners, if you want to set up a consultation with Jason in his office, I know Jason loves to hear from folks, get your questions answered, get a financial plan in place, a retirement plan in place. All you have to do is pick up the phone and call 989-835-7203. That's 989-835-7203. And again, it's a no charge, no obligation consultation, or go to GreatLakesInvestmentAdvisors.com to set up that consultation or to ask your questions. And we're back to wrap up your Financial Empower Hour. Jason, we're here with an amazing guest today, Tyler Ellegard from Gradient Investments, right?
Yeah, that's right. And it is always awesome, Tyler. Thank you again, for the time you take out of your busy schedule of managing a team over there at Gradient Investments, managing portfolios in the trenches, doing the research. It's amazing what you guys do. And I mentioned on the last segment, it really shows how good you guys are when you look at when the market performs and the market goes up. It's cool to beat the market once in a while, but I've been doing this for almost 24 years, and I don't think I've ever told one investor we are always going to beat the market, beat the market, beat the market. That's never, I don't think ever been the goal or objective, the main goal or objective. You should be able to capture a majority of the market upside. Some days you'll even beat it, or some weeks, or some months, or some years. But I think, and it shows in how you guys manage your portfolio. It shows in the results. There's no arguing with those numbers. You guys capture a very, very large upside of the market. But what's more powerful, and how I've really made a living helping families feel extremely confident and extremely comfortable with their investments into and through retirement, is minimizing the risk, reducing the loss on the downside. That is hands down, I think, how you guys have absolutely stolen the show when it comes to managing portfolios for families into and through retirement, is because when the market's down, think about it, if the market's down 10% and you're down 10 or 12, you have to be pretty aggressive on the upside, because you got to make maybe 14 or 15 just to break even, right? But if the market's down 10 and you're only down 5 or 6, you have more money left. You don't have to be as aggressive. You don't have to beat the market on the upside. So it's a totally different, for some people, it's a totally different way to look at managing investing money. Most people think, well, I got to beat the market. I need 20%. Well, if you shift your mindset a little bit, and I learned this from Gradient Investments probably 18 years ago or so, if you don't take on as much risk, if you reduce your exposure to losing money, meaning if you don't lose as much, you'll have more money left. And then you don't have to make as much. You don't have to be as aggressive and try to always beat the market, because you have more money left. And to me, at the end of the day, what's more important to you, higher returns or more money? Right? I mean, you can have these high returns, but if it was because you lost too much, you don't have as much money left anyhow. So, Tyler, that's been awesome. It really, the proof is in the pudding, and your numbers don't lie. And all of my families that have money invested with you, they absolutely, during the best of times, they're extremely happy. But during the worst of times, they might even be happier because they simply didn't lose the money, or as much money as a lot of their friends and neighbors did. So all this stuff that you talked about on the show, that this is insight coming from you. So for my listeners and viewers, this insight's coming from a person who manages this type of portfolios and this type of money, and makes my families and my investors extremely, extremely happy. So, Tyler, before we wrap up here, I'm going to put you on the hot seat as I always do. Throw at me, Tony. Let me know how long we have, if we have 90 seconds or 3 minutes, whatever it is. But before we go, Tony's going to give you how much time you have, Tyler. He's going to say go. How much time?
1 minute.
1 minute. Okay, you got 1 minute. Tyler, the number one thing to look out for moving forward the rest of this year. 6 months to go, 60 seconds, go.
AI hype.
So not AI. What he said is AI hype, you guys. Think about that. AI hype.
I think you need to be careful on where you're investing when it comes to companies that are going to be benefactors of AI, and be mindful of which ones you own. And because there's a lot of AI stocks out there that could be beneficial, or that could benefit, but the proof isn't in the pudding yet for them. So
yeah,
good point. And Tyler, you have multiple portfolios that you guys manage at Gradient Investments that do have a lot of this AI exposure, right? Or companies that will benefit from the AI boom and AI exposure. Is that right?
Yes, we do.
Good. And a lot of my families are in those, so you probably recognize those right there. So, Tyler, thank you so much again for being a guest on the show today. Again, for my viewers and listeners, if you're viewers, let me know what you think about the studio. It's a brand new upgrade. If you're a listener, but you haven't checked me out on YouTube yet, please, I beg of you, please go out there, spend a couple minutes, check us out on YouTube, and let me know what you think of the new studio.
All right, and that does it for today's episode of your Financial Empower Hour with our host, the man himself, Jason Cryderman.